Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So actually today on the fundamental background we have a lot of things to discuss and a lot of things to think about. It's just because, as we have said actually yesterday in our Forex report, it seems that the strategy of the United States government is changing. So instead of the moving step by step with the gradual making overall financial system inside of the United States tight with the draining liquidity gradually and slowly, it seems that something is going on and they are preparing for something really big. What it will be, currently nobody could tell. It's just because, well, it's a lot of uncertainty around this question. But with the steps that have been done and start doing right now, it seems that government is coming to the concentration of the global and the whole financial system in a very tight range of the institutions. So mostly it will be some government authorities such as the Minister of the Finance, United States Treasury, Fed Reserve, and probably few big whales such as JP Morgan, Fidelity, BlackRock, maybe a few others. And they intend to concentrate the whole financial system in a very tight range of the institutions, which makes it easy to control. Because few processes right now are speeding up that it's difficult to explain by some other things. So we see massive interest among the Wall Street to the cryptocurrencies, and they are actually coming on with the ETF orders, ETF files, like the bulk to the Security and Exchange Commission. What they will do on this market, on the actually capitalization around 1 trillion, if we'll take the big four such as Bitcoin, Ethereum, USDT, it's around 1 trillion with the assets under management of all these big whales around 27 trillions. How did they just fit into this narrow market with their assets? It's a big question. Really an obvious acceleration of the initiating of the central bank cryptocurrency in Europe in particular. This is also means something. Then drying out the funds out the European stock market, out of the China. So confrontation with the China in the trading sphere. So and some really silence on the domestic market. So we do not see big borrowings from the Fed. We do not see big flows of the liquidity out of some traditional instruments such as reverse repurchase agreements, Fed reserves, and so on. So it makes me think that it's gradual and slow preparation for the big step, and probably we should get the first signs of this step when we see big movements of the money inside of the United States in these major indicators: money supply, repurchase agreement, banks reserves with the Fed, United States Treasury account. So when all the stuff will start moving, it means that something is starting to going on. Currently, we do not have anything. So we have nothing to do, just wait and control the major indicators that we have. Meantime, in the shorter term, actually there's no surprising inaction that we see on the gold. We are mostly watching and moving with our trading plan. Once downward action has been completed, now at target 19 even, we're turning to the upside action. Is actually the major background to our scenario is the strong confidence support on the weekly chart, and we are watching for response. Actually, it has started already on Friday, and setup that we discussed on our hourly chart with the mining hand and shoulders has shown good performance. Anyway, this is just the beginning, and here are the sequence of the possible targets that we could achieve. Yes, this is fib levels, but actually they are standing in agreement with the possible extensions that we will show you on hourly chart a bit later. First of all, we're coming to the first destination point is 1927. This is 30% level of the butterfly shape, which is treated as a minimum reaction, a minimum target of the butterfly pattern. As market is coming to it, almost it has been reached, just few buck stands until it will be reached. Next one will be confluence around 1948, 1952. That's the two major targets that we intend to consider. If we will get lucky, and maybe if our fundamental background will change a bit, potentially we also could consider upper direction back to the 1980 area, where might be formed the neck of the big head and shoulders pattern. So it might be the shoulder, head. If market returns back up, it will be neck, and this right arm to be formed, and potentially we could get stronger upward reaction with this pattern. But this is a bit early to speak about it. Although, as you can see, the divergence that we have right at the weekly confluence support with the MACD indicator points particular on this scenario, because as you know, the target of the divergence, if it is proper divergence and if it starts working, is the top between the bottoms. And this top stands precisely around the neckline of the potential pattern. So that's what we need to keep in mind. Meantime, on the hourly chart, we're going with the classic pattern appearing on a lower time frame. This is a kind of nested dolls. So you have first pattern has been formed, which is head and shoulders. Markets keep going higher, larger head and shoulders might be formed. If it will go on furthermore, as I said, it might be on a daily larger head and shoulders to be formed. So it happens very often. And here we are first dealing with our initial head and shoulders. It actually hits the OP on Friday. Next target is the XOP. It's 1932, which is very close to the 1927.50 daily resistance area and a minimum target of the daily butterfly. That will be next destination point. This is actually the picture of the perfect bullish behavior. I do not know whether it will be definitely in this way. I would hope for that. But after that, supposedly, we could get starting of this larger pattern, and we get another chance for taking the new long position with the bottom of the right arm, but of the larger pattern. That's the strategy for actually few sessions, I suppose. Scalp bears also might consider taking the short position around the potential neckline, because it will be agreement resistance of the XOP with the daily fib level. This is not for those who trade on the daily 4-time frame chart, but if you trade, for example, on the 5-minute chart, that will be not bad solution, especially if you get some clear bearish patterns around it on the 15-minute chart, on the 5-minute chart to be formed. And then we're considering this type of action. But despite how attractive and interesting this chart looks like, don't forget to control irrational price behavior, because it might be an early signal that something is going wrong. For example, if market will fail to proceed to the XOP, or if it just turns down, drop back inside of the butterfly, inside of the hand and shoulders body, right there, it also will be negative sign, especially if it drops below the C point. It could mean something is wrong with the bullish reaction. Maybe it will take different shape, maybe something else. But in the current circumstances, normally market has to move further, at least to the XOP. If it will not happen, then don't hurry up with taking the new long position. So that's just a few things to mention to intend to control in the beginning of the next week.